So I was with a friend who wanted to trade the Forex market, and while I was doing something else, he went down to take a trade, and later on he came to meet me and then he said, "Yo, Zuko, the trade I just took hit stop loss." And I was like, "Yo, what happened?" I went on to check up his chart and I realized he didn't pay attention to liquidity. And trust me, this happens to a lot of newbie traders, including me. It happened to me a lot. In fact, at some point in time, I almost stopped trading until I discovered the truth about liquidity. In today's video, I'll be telling you guys exactly where liquidity can be found, how to spot liquidity, and how to trade liquidity for yourself. My name remains Zuko FX, and if you haven't liked or subscribed to this channel yet, please do that right now. So let's go into the video proper. So basically, there are two types of liquidity. We've got the structural liquidity and we've got the engineered liquidity. But in today's video, we'll be focusing more on the structural liquidity. Let's go into the chart so you understand what I'm trying to say. Now, for you to understand liquidity or for you to trade using liquidity, you must first ask yourself a question any day at all whenever you want to trade. Where's the chart headed? Where's the trend headed? You want to know the bias. So take for instance, this chart schematic tells you price is going up. Okay, you understand? Number one, price is going up. The next thing you want to do is to mark out your structures, right? Mark out your structural low and your structural high right here. Now here's one thing: we're trading liquidity and we're trading structural liquidity, right? It is important to know that liquidity are being placed within the low of price and the high of price. You say why? This is because price needs liquidity to move, and without liquidity it would not move. But one thing you want to do is to trade in such a way that you don't become liquidity for other people, and that is why we are doing this, so you understand how it is you want to trade. So take for instance, you come into the market, you want to trade and you haven't seen any liquidity sweep. Best believe that trade is not for you. So what do I mean by liquidity sweep? Here goes. You want to see something like this before going up. You want to see price clearing this low, right, before headed towards the upside. Now this is the type 1 structural liquidity. The type 2 structural liquidity goes this way. I'll draw a chart schematic right here. Price giving you a higher high, a higher low, a higher high, a higher low, and then price gives you a series of little higher highs and lows within a structure before giving you a big move that breaks an external structure for falling back down. Now before you take this trade, let's mark out our structures. Right now, this is an external range structure, right, and this is the swing low. Right now, within this external range structure and the swing low, you can see that there is a little structural move within the structural range. Now this is called the internal range structures. Now, in a situation where you want to trade and internal range structures are found, then you're good to go. All you need to do is to wait for price to fall back down, clear some of these structures before going back up. In this scenario, you don't need to wait for price to clear this external swing low, right? You don't need for price to clear that. Once you see something like this, you expect price to clear the internal range structure right here, or probably your internal range liquidity, so to speak, whatever it is you want to use, right? And before price does, when price does that, you wait for price to touch down to your point of interest. Let's draw a point of interest, right? This box right here, I mean the rectangle right here. When price does that, you're good to go. Take your trade. Let's use the long position, long 2. You're good to go. Right, see, you want to do 1:3 or 1:2, whatever it is you want to do, you're good to go. Just put your stop loss some few ticks away from your interest spot. Right, now this is it. Now you should not confuse this. This is the type 2 structural liquidity, the type 1 structural liquidity. Now the question is, how do you trade this thing? How do you trade this structural liquidity? The answer for me is just pay attention. In a given day, when you want to trade the Forex market, you didn't see anything like this. You didn't see anything like this. Best believe you're the liquidity. The idea is to spot the liquidity before you become the liquidity. So you just want to spot the liquidity in every trade that you take. Now let's go down to the chart, so I'll show you exactly what I mean. Now, the first thing I said was that for you to trade structural liquidity the right way, you must first spot out your bias. So right now, you can see price giving us highs. Now, this is on the daily time frame, giving us highs, right? So you want to buy because you don't want to ever trade against the trend. The next thing you should be doing is to go down to your lower time frame, your entry time frames, probably your 30-minute time frame, right? Where you can easily mark out structures, right? Let me put this, well, 30-minute time frame and mark out your structures, right? Let's start from here. See price giving us a higher high right here. See this high has been cleared, and then a higher low right here. Right. Now what happened next? Price then created a new high right here. This is the new high right here, and then this is the low right here. This is the low right here. It's quite big. Let me reduce the size a little. Right. Now, what did you notice, guys? What did you notice? Let me draw a chart schematic on this so it becomes very, very clear. Price went down before going up, and when it did, it cleared this liquidity. And just like we said, this is the type 1 structural liquidity. Type 1 structural liquidity happens in such a way that price clears the structural low, the external structural low, before going up. Now this is an example of the type 1 structural liquidity. And once you've seen something like this, best believe your trade should go the right way you want it to go, right? The right way you want it to go. So let's say you come into the market in any given day, you see stuff like that, right? Let's pull up the long 2. See stuff like that. You just want to come in here and click on your long 2 and buy, right? You could use 1:2, whatever risk to reward you enjoy using the most. Now let's look for the type 2 structural liquidity. The type 2 structural liquidity is the type where you've got internal range structures within an external range, and you expect price to clear those internal range structures before you continue buying or before you continue selling, as the case may be. So right now we've seen an example. So here is a structural high right here, and here is our structural low right here. All right, now let's see you've marked out your POI, and let me put out the POI. Here's your POI right here. Here's your POI right here. Now what do you notice? Price went back down, cleared this liquidity, right, or what call it this internal range structure. Look at this. Look at it. Price cleared that internal range structure right here before going up. And if you're like me, you just want to come into the market in any given day at all, and you've seen stuff like that, you just want to start buying. Put your buying to, right, and your stop loss a few pips away from your entry, and voila, you're good to go. Guys, this is exactly how to trade structural liquidity. Best believe you need to practice this, because practice makes you become better at whatever it is you want to do. It doesn't take a day. You could go about this for 2 days, 3 days, a week, 2 months, and show you practice this over and over again. Just like I said earlier in recap, for you to trade structural liquidity the right way, you must first pay attention to the bias. You need to ask yourself, where is the bias headed to? The next question you need to ask yourself is, where is your structure? Then you start marking up your structure. The next question you have to ask yourself is, where is your liquidity? When you don't see structural liquidity this time, best believe you have liquidity, so just stay away. So once you've seen the type B or the type A structural liquidity, you're good to go. Okay guys, so this is where we come to the end of today's video. If you haven't liked or subscribed yet, do that immediately. My name remains FX. See you in the next one. Peace.